In this video, I'm going to share with you two companies I believe are very undervalued right now. In fact, I've been accumulating shares of them over the past several months. So if you like finding potentially hidden gold nuggets, I think you're going to love this video. First, before I share these two companies with you, please understand these are not my recommendations. Although I believe they are very undervalued, right now the market disagrees with me, so I could be totally wrong. So if you like what you see, please make sure you do your own research before you trade in these companies. That being said, let's get started. The first company I've been accumulating shares of over the past several months is Comcast. Now, Comcast is a global media and technology giant. They offer broadband and wireless connectivity and video services. They also have a media segment that runs their streaming services, national networks like NBC and Telemundo, the streaming service Peacock, and Sky Sports Networks. They also own theme parks like Universal theme parks in Orlando, Hollywood, Osaka, and Beijing. Something I found interesting about Comcast is they also manage properties such as the Philadelphia Flyers and Wells Fargo Center. This company was founded in Philadelphia, Pennsylvania in 1963 and still runs a thriving business. But enough with the intro. Why do I say it's a company you might want to consider digging in a little bit deeper in because it might potentially be an undervalued company? Well, let's look under the hood. Let's see what this company has going for it or not going for it. Then you can decide if it's one you should dig into a little further. I'm now on Seeking Alpha. We're going to dig into Seeking Alpha here and look at some of the fundamental indicators to see if it is potentially undervalued. If you like what you see, I'll leave a link for you down in the description where you can get a free trial as well as a discount to an annual membership with Seeking Alpha. One of the things I like about Seeking Alpha is that it gives you a lot of metrics you can compare in different time frames. And here you see some of the ones that I like to check out when I'm digging into a company to see if it's undervalued. Now with Seeking Alpha, they give you the current factors as well as the 5-year average. This gives you something to compare the stock against, how it's performing now as compared to the past 5 years. And just so you know, I like to do my own research and I go back 10, 20, or even to the life of the company just to compare it against where it's currently trading at. But for simplicity's sake, we're going to use the Seeking Alpha website to look at the two companies I'm buying right now. One of the metrics I look at are price to earnings. Here you see 4 ways to look at that. Now just looking at the non-GAAP price to earnings, notice it's saying that Seeking Alpha is trading at a 25% discount. That's a substantial discount. And here you see the trailing GAAP price to earnings ratio, notice it's saying that it's trading at a 38% discount. That makes me get interested. Now let's scroll down here and look at its price to sales metric. Notice again, we see it trading at another discount, an over 21% discount. Is that starting to get you excited? Now we can also look at things like its price to book value. Here you see again, it's showing a 14.5% discount. And another one I like to look at is its cash flow. Companies have to have cash flow to survive. And again, we see here that based on its cash flow over the 5-year average, it's trading at again a discount, an over 10 to 14% discount. And finally, its dividend. A dividend is a nice way to look at a company. It tells you pretty quick if it might be trading at a discount. You see right now its dividend yield is higher than normal. It's 20% higher than normal. So when you look at all these factors, it might be a sign that this is a company you might want to dig into. Is there something wrong with the company? Is it fundamentally breaking down? Or is the market temporarily undervaluing the company? Personally, after doing a lot more research than I just did here, I believe the company is fundamentally undervalued right now. I think there's a potential here. So I've been buying some shares outright in my outright stock ownership account, and I've also been trading options in it. So let me ask you, what do you think about Comcast? Do you think it's potentially undervalued? Down in the comment section below, if you think Comcast is potentially undervalued, type C and yes. If you think it's not undervalued, type C and no. Now let's move on to stock number 2. Whereas you've probably heard that first company, Comcast, you may not have heard the second company. The second company I'd like to point out to you is GENPACT. Now I do want to tell you, these are just 2 of the 21 companies I just bought a couple weeks ago. So I have 19 others I bought that I believe are undervalued, but I'm sharing with you 2 of my favorite ones. First, let me tell you a little bit about the company. GENPACT began back in 1997 with just 20 employees under its founder. And I won't try to say his name because I'll totally mess it up. But it started out as a small project that was managing the back office services for GE Capital. Over the next several years, the company grew rapidly, building infrastructure in India and providing tremendous job opportunities, especially for women. Now today, GENPACT is a huge company, has over 125,000 employees across 30 countries. They serve the Fortune Global 500 companies with expertise in business processes, digital operations, data technology, and AI, all while staying true to their mission of creating a world that works better for the people they serve. But why do I say it's potentially undervalued? Let's dig into the numbers. Now we're back on our old reliable Seeking Alpha website. Let's see why I think it's potentially undervalued. And again, this is just some surface research. I do a lot more research before I buy these companies, but I want to just give you a glimpse into how I do that research so you can dig into it a little more if you find this company interesting. In just a minute, I'm going to ask you to vote again whether you think GENPACT is potentially undervalued or not. Now we're going to go back to these same metrics I mentioned to you earlier, and there are a lot more. There's a lot more tabs. You can do a lot more research on these companies in Seeking Alpha, but I want to keep this video kind of short. I just want to give you a surface level intro into GENPACT. So here we go. Non-GAAP price to earnings. Notice compared to its 5-year average. And remember, I like to go back 10 or 20 years, or even I like to look at the whole life of the company. But at a glance here, Seeking Alpha gives you the 5-year average. So you're comparing where it's currently trading at compared to its 5-year average. Notice it's trading at a 25% discount using that metric. Now, if you go to the trailing GAAP price to earnings ratio, notice the discount. It's saying it's a 49% discount. We're trading a lot lower than where it typically trades at based its price to earnings. Now let's scroll down here. Let's look at its enterprise value based on sales. Again, we see a discount of almost 22%. Let's scroll down a little bit farther. We look at price to sales. Again, we see another 20% discount. Then if we look at price to sales forward looking, again, we see almost a 20% discount at 19.26%. What about price to book value? Again, another discount. 28.2%. Then let's look at cash flow. Remember, cash flow is vital. A company has to have cash to survive. What is their price compared to their cash flow? Well, again, we see a nice discount. If we look at the trailing metric, it's at a 12% discount. And if we look at the forward factor, it's at a 37% discount. Then one final one, the dividend. Notice the dividend is 37.9% higher than normal. A good solid company is potentially undervalued? In my opinion, yes. But what do you think? Let me know down in the comment section below. If you believe it's potentially undervalued, type G and yes. If you don't think it's potentially undervalued, type G and no. Those are just 2 of the 21 companies I just bought a couple weeks ago that I believe are potentially undervalued right now. Now, obviously right now the market disagrees with me, but I believe over the long term, which I'm a long-term player, I believe these companies are potentially undervalued based on what they're projecting is going to happen in the future. If you agree with me, spend some more time and research these companies to see if they're a fit for you. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. If you like some of my favorite tips on how I go about finding companies I believe are potentially undervalued, check out the video at the link above and the description below entitled My System for Picking Winning Stocks. Until next time, happy investing, and we'll see you again soon.